Hi guys, my name is Gil. Welcome to Crypto Time channel. Today I want to share with you some classified tips and tricks. So you know the drill, please consider subscribe and hit that bell to get the latest from our channel. So let's run the intro. Guys, today the thing here is to declassify some tricks. So you probably won't find anything like that in the books, or or at least nobody kind of tells you that. That comes with experience. And so yeah, let's jump into the chart. Here we are, Bitcoin daily chart. So the first thing I want you to do is to go to indicators. You can find that indicator I will show you in every single trading platform. I'm using the trading view, but you can find that in the free version as well. So let's click indicators, and then you can start typing Bollinger Bands. So as you start typing, it just shows up right here. I already have that saved in my favorites. You can do the same by clicking on the star icon here. So let's click on Bollinger Bands Indicator, and now we have right here our indicator. And then I want you to know that the Bollinger Band indicator we're gonna use today is the default version. Okay, so make sure you have that at the default parameters. So the length is 20. So standard deviation you can leave as it is, 2. And then if you want to play around with the colors and background, yeah, feel free to do that, but otherwise leave as it is. Okay, so here we are on the Bollinger Band. So another thing that I want to remind you that the Bollinger Bands works with the volatility of the market. Okay, so you can check it out how the Bollinger Bands works and formulas and all that stuff, but I just want to remind you that the volatility is key right here. Okay, so that's the first thing you have to do, and another thing I'm gonna do is to bring up an analogy where we have the market in a day. So we are on the daily chart. So we have a day in the market where the market is super bullish or bearish. So that will depend on on our starting point, and then that brings a lot of volatility to the market. So by the laws of nature, we have to come back to a more stable stage. Okay, so let's so you're gonna know what I'm trying to say. So let's pick a red day, or a day where the price is falling a lot. So the bears are basically very angry. Okay, so let's pick this candle right here. So how that works, so how that declassified a tip works. So let's zoom in to make it easier. So can you see this big red candle right here? So on that day the bears were very angry. So that day is kind of that day you have you shouldn't you should have stayed in bed. Okay, so that's the kind of the day, at least for the bulls right here. Okay, so the bears are very angry. So you see the volatility. So how can we spot that? So if if the candle breaks below the lower band of the Bollinger Bands, okay, if it breaks below, so that means is a very volatile day. Okay, so and then we're gonna pick that day as our starting point. So we have to pick candles that which breaks through the upper or the lower band. of Bollinger Bands. In this case, the lower band, we're gonna pick the red candles, and for the upper band, we're gonna pick the green candles, okay? So I want you to pick, you know, and you can do that, you know, backtracking that as an exercise, but works very well. So the first thing we have to do is to pick the red candle. So find the red candle that breaks below the lower band. So we have one here, and then we have to, you know, to spot a zone where the market will go next, you know, to get the stable stage back in, okay? So that spot is the opening of that candle. So we are working on this candle right here, okay? So I'm gonna leave the arrow just to, you know, to show that, okay? So here's our candle. So broke below the lower band. So now we're gonna mark. So pick, you know, I can pick this horizontal ray and select the opening of that candle, which will be gonna use the magnet, so which will be right here, okay? So what that means is once the candle closes below the lower band, we will set the opening of that candle as the point of return, you know, for the price in the future. Okay, so as you can see, setting that, we see that over a couple of days, the market goes back there to that region, okay? Because it was very volatile that day. So again, by the laws of nature, we have to come back to a more stable stage, okay? So the market works kind of the same, okay? So as you can see, the market goes all the way down that day, very angry. So the bears are dominating the markets, no chance for the bulls. But you know, we know that there is a probability, or it's very likely, that the price will go back to the opening region of that red candle, okay? And then to do the same, now we're gonna do for you know, the green candle. So let's spot this one right here. So can you see this green candle? Now the bulls are dominating the market, and no chance, you know, for the bears right here. So it's very volatile. So this candle this day breaks through the upper band. So what we're gonna do is we're gonna look to mark the region just on at the opening of that candle, which is here, okay? And then we're gonna know that sometime in the future the market will very likely to go back to that stage of you know, stability, okay? So as you can see on this day, the market just hits that spot. Okay, guys, we can, you know, we can do that back here. Let's clean the drawings. Let's zoom in out. Let's find some more candles. So just spot one here. So we have to make sure is the body of the candle. So the candle has to close up or below, you know, the bands. So for example, right here, like we wouldn't pick this candle, okay? So don't look to, you know, to the wick, but I'll consider the body. So the closing of that candle. So here we have one green candle breaking through the upper band, okay? So what we're gonna do is, again, to draw zone exactly at the the opening. So for the green candle, we spot the opening. Okay, so we're gonna spot that region. So that means the market will eventually go back to that same spot. So you see on that day, the market just hits that spot. Okay. So then you can do whatever you want, but you can buy and sell using this strategy. Of course, doesn't work always. There is no way to have 100% strategy. There is no way to have that, but it is very important to have, of course, a better win rate strategy. Okay, so sometimes doesn't work this strategy, but works more than fails. Okay, so that's the point here. So here there's another one. So here we have one for the red. So let's drag this to the right. So here we have this big red candle. Okay, closing just below the lower band. And now what we're gonna do is to mark that region, so the opening of that candle, which was right here. And then we can see that after like several days, we hit that spot right here. Okay, right here. So that is another one working right there. Let's pick one that didn't work well. I think I have one. I have spotted one somewhere. Let's see. Yeah, this one here. Okay, this one right here is one that the strategy fails. Okay, so let's zoom in. So this candle right here is breaking below the lower bands. Okay, and we would mark its opening, which is right here, as a point of stability. So the market eventually would go back and hit that target, but as you can see, the market didn't do that. Okay, so sometimes fails. All right, sometimes fails, but is a fair enough strategy for those who want to to work with it. So we can do a back-end testing. So again, there is another one right here, a red candle. Okay, right here. So we have a red candle right here, and then we would again breaking below. So we would draw the opening of that candle as our target, and then you see it's failing. It's failing once again right here. Here we have another one. So this time around it's a green candle. So we would have our target, on at the opening. So let's bring it way down here. So for the green candle, so the opening is below, is here, right here. Okay, so you see for this candle, the market goes all the way and hits on the second day, hits that target. So we can do that. So ignore the candles having just the wick breaking through. So we have to consider only the body. So here we have another one failing. Okay, so there's another one failing right here, because we would in this case set the target at the opening, so it would be here, but the market didn't go there. Okay, but we have lots of good opportunities. Let's see the red candle right here. We would set at the opening of that red candle somewhere around that spot. So as you can see, the market goes exactly there on the next day, and then we can keep doing that over and over again, and we have a good rate for that strategy. Okay, guys, before we wrap up this video, I want to give you kind of giveaway now, which is try not to use that strategy on intraday charts, let's say 2 hours or 4 hours, because we're gonna have more noise and less data in those candles. Okay, so here each candle represents 1 day, so which means we're gonna have daily data within that candle. So that kind of refrain to get false signals. Okay, so if you go to intradays like 15 minutes or even 1 hour, 2 hours, so you might get more signals, but you also will get more false signals. So I would suggest you to keep on the daily chart, 12 hours, maybe 6 hours. Okay, but you can do the exercise and do your backtracking using the daily chart, and then you move into intraday charts and see if that works for you. Okay, so I think that's everything for today, guys. So please subscribe again. I have another video talking about a strategy using Bollinger Bands. I'm gonna leave the link in the description down below, and see you on the next video.